I think it's too early to talk about rate cuts, and I think that's clear from them today in terms of the statement we've seen so far, at least. Of course, we get the press conference in another hour and we'll get to hear from the governor. But the fact that their forecasts haven't got inflation, they've still got inflation above the target band by the end of this year. They've still got inflation falling, not getting to they don't get to the midpoint of the target band until the middle of 26 on their set of forecasts. I think all of that tells us that they are still more concerned about inflation being too high than they are about the fact that growth has slowed. As you say, the growth forecasts haven't been changed much, and inflation is still too high. So I think I doubt they're going to be cutting anytime soon. In fact, my central case is that they won't be cutting in 2024. But I think there's got to be some risk that they might deliver another hike, but that's not my central case. I don't think they're going to get there. I don't think they're going to need to. I think we're on the disinflationary pathway now. Growth is below trend. The unemployment rate is gradually trending high. Inflation's heading in the right direction. And then let's not forget, of course, out in the world, the conversations about the Fed cutting and the ECB cutting and when that's going to happen and so on. So the global cycle has turned as well. So I don't think we're getting more hikes. I think we're going to get a long hold.
We're getting a long hold, Paul, but as far as the RBA's minutes are concerned, or the commentary accompanying the decision, the RBA is saying that further increase in interest rates cannot be ruled out. So they're not closing that door. And just to add to that, we are seeing a reaction in the Aussie dollar. Can we bring up the Aussie dollar once again for our viewers? We just saw that flash, a little bit of a spike really coming in for the AUD. I'm waiting for the chart to just flash that. So that's 0.3%, 65.05. How do you kind of reconcile and kind of connect the dots here?
Well, this is the view we've had. We thought the market had priced in too many cuts, that it was too excited about the idea that rate cuts might be arriving sometime soon. And that there was too much, I think the market was drawing too much attention towards what's going on in the US, where we are seeing more disinflation, where the conversation is more about rate cuts, that Australia is different. Australia is different because we lifted interest rates by less. We started later. Inflation's coming down more slowly. And I think there's another element too, a deeper element, and that is that productivity growth has actually been much poorer in Australia than it has been in, say, the US, where it's been in a bit of a cyclical recovery. So I think the RBA is right to tell us that actually there's still a chance that they may have to lift rates again yet. I don't think they're going to end up delivering on that, but certainly you would characterise what today's statement. Today's statement is more hawkish than the market had been priced for.
Can I ask you, what would be the risk to them perhaps going down that path and holding for an extended period of time? Because obviously, Australia's a little bit different than what we're seeing in the United States, more rate sensitivity, but at the same time, some of the things we've talked about before in terms of migration, it's just a very different dynamic in Australia specifically. But we saw that consumption's coming off a little bit on the retail front. Is there any risk there in your mind, or is there too much of a case that you'd want to get services inflation in check, make sure that, the rest of the other forms of inflation, the goods inflation, are in check, and that's why you'd have to keep rates at this setting for some time?
So I think we're seeing signs that tightened monetary policy is slowing down the economy, is weakening the consumer in particular, and you're seeing that in tradables prices come down. You're seeing it in a weakening demand on the consumer side. However, as you alluded to, the challenge is that the supply side of Australia's economy is actually quite weak. We haven't got enough housing. We've had services inflation that's been running more quickly. Productivity's been particularly weak. And so although demand has slowed, the supply side's quite weak, and you've got still domestic inflation or non-tradables inflation, rents, insurance, utilities, and the services more generally. They're still running at a rate that is well above what's consistent with the Reserve Bank's target band. So I think with that, that's why the RBA has come across as a bit more hawkish, why they're still talking about the idea that it's possible they could be lifting rates a bit further, why the story is a bit different here to say what's going on and what we're observing going on in the US. I mean, keep in mind, as I said earlier, the Fed's done 525, the RBA has only done 425. So I think the door is still open for the possibility they could lift rates, but I don't think that's going to happen. My central case is they will sit still and they'll have they'll hold for an extended period of time. We should think that there won't be rate cuts this year, in our view. We think rate cuts are going to be a proposition for 2025.